an ESOP company that can avoid a 280E tax code. How does it work and how is it structured? Hey everyone, welcome to our latest TDR Cannabis Exclusive. Happy New Year as we kick in 2024. Hope you all had a good holiday season as we get underway here in 2024. And in case you missed it, there is some big news right before Christmas involving the largest ESOP-owned cannabis company. Why is this a big deal? Well, they're going to bypass the most hated term and word in the cannabis industry, which is the 280E tax code. How? Well, let's welcome in. He is the managing partner of MBO Ventures, Darren Gleeman, to the podcast. Good to see you. Hope you had a good holiday season. How are things?
Fantastic. Good to see you guys. I appreciate you having me here. There's been a lot of questions on how this works.
Exactly.
I've been involved in this for years, so I'm really psyched to have this finally come to fruition.
Yeah, and I think a lot of people are going to ask, okay, let's start off the top. How is this structured? How is an understanding an ESOP company that can avoid a 280E tax code? How does it work and how is it structured?
Okay. First of all, let's explain a little bit about an ESOP, right?
Yes.
Bingo.
That's good. Yeah.
Okay. An ESOP is just another way for a business owner to sell their company, right? Yeah. You can sell to private equity, you can sell to a strategic buyer, or you can sell to your employees via this thing called the ESOP structure. Why? Why sell to your employees, right? Well, out of the goodness of my heart, I want to sell to them because it's a really good thing. But you know what? Employees don't have any money. So why would I do it? Well, the government came up with a lot of ways to incentivize you to sell to your employees because, look, we want in this country employees to have ownership, to be able to afford to send their kids to college, to have retirement, to have their own home. And a normal, regular guy, it's very difficult to do that.
Yep.
You need ownership. You need to have equity, right? And so the ESOP structure, which was created back in the 70s, is a way to get equity into the hands of the employees. So how do we convince a business owner that instead of selling to private equity, sell to the employees? It's all about the tax subsidies. And there's tremendous, tremendous tax subsidies. For instance, when you sell your company, any company in the United States, when you sell it to anybody, to a private equity firm, to a strategic buyer, you must pay capital gains tax.
Okay.
The Dale report, when you guys eventually sell your company to a big strategic buyer and they buy this company for $100 million, you're going to end up paying $30 million in capital gains tax to the state and to the federal.
Big price tag.
If you decide to sell to your employees via this ESOP structure, those capital gains are deferred. And if you structure correctly, which of course we do, it's deferred forever. Zero capital gains tax. It's a big deal. And in all industries, what I just told you, that's a really big deal, deferring your capital gains tax. In the cannabis industry, good deal, but that's not why we're here, right? Number two, second advantage. And this is for most companies, right? Most industries, cannabis not really because of 280E. But normally, right? If I am a private equity firm, here's a secret for all the guys out there that are listening to this. How do I buy a $100 million company? Let's say it's $20 million in net income.
Yep.
And the company's valued at $100 million.
Yep.
How do I do it? Here's the secret, okay? I'm not giving you $100 million. What I'm doing is I'm going to give you $20 million for my fund's money. And then what I'm going to do is I'm going to borrow $60 million off of the cash flow of your company. So if your company's making $20 million a year, I can borrow 3 times 20. I can borrow 60. So I get 20 from me, 60 from, let's say, JP Morgan, and the other 20, right? 20 plus 60 is 80. The other 20 is called an earnout. That means as long as you hit those numbers that you said you're going to hit, you're going to get the last $20 million. If you don't reach those numbers, you're not getting paid that $20 million.
Right.
That's typical private equity. With an ESOP, right? It's I totally lost where I'm going.
How the ESOPs work logistically for a cannabis business versus a traditional company.
Oh, yeah. So with an ESOP, right, you take out it's the same exact concept, right? Except there's no equity with an ESOP. With an ESOP, it's all debt. So before, right, cannabis with a private equity, it was debt and equity. With an ESOP, there is no equity. All right. So with an ESOP, it's all debt. So that same $60 million that we were borrowing before from, let's say, JP Morgan, With an ESOP, you borrow the same amount of money, except the difference is that money that I'm borrowing right now for that 60 million, it's actually going to be cheaper money, right?
Okay.
And I'll tell you why in a second. So 60 million, I get same JP Morgan. The other $40 million is a seller note. A seller note is an IOU from the company back to the owner. That's how you're going to get that $100 million from. I'm leveraging off the company's own cash flow as opposed to having someone else do it. So we levered this $20 million a year. You get a loan for $60 million and the other $40 million seller note. This is the cool part. Normally, if you take out a loan, if anybody takes out a loan in this country, right, any business, there's interest. We can all deduct the interest.
Right.
But nobody can deduct the actual loan itself, the principal of the loan. That just doesn't happen anywhere, except when the ESOP is doing this. Then the government allows the company to take a full deduction of the entire principal of the loan in addition to the interest. So this example I'm giving you of the $100 million, the company can deduct $100 million in addition to the interest. Now that's in every other industry, but because of 280E, sorry, there's no deductions.
Okay.
Right.
So there's a lot of nuance to the cannabis industry. I mean, how does this work? Does this work for publicly traded companies? Does this work for private companies?
Yeah, that's a good point.
Are there certain cannabis businesses that can and cannot leverage this, like cultivation, retail, distribution, or is it kind of like a blanketed approach that you guys are taking to the sector?
No, it's the entire sector could totally use the structure. There's no companies in the sector that can't. And the last piece of it, right, is that a company that is structured inside of this ESOP, right? The last piece, which is the biggest piece, is that the company itself, if you sell 100% of it, pays zero taxes. That's zero federal tax, zero state tax, and this thing called unrelated business income tax, which is really the key, paying zero. And when you pay zero taxes, deductions do not matter. Okay, deductions don't matter. So in this example of a company making $20 million a year, if it's a cultivation firm, if it's a retail, if it's a manufacturer, it doesn't really make a difference. You're paying a lot of taxes. Scheduling or rescheduling, if it happens, it doesn't happen. There's a lot of tax you're paying. Currently, because of 280E, if you're making $20 million a year, I'm using that number just because it's easy. You're making $20 million a year, tax could be anywhere from, let's say, $11 million to $14 million. When you sell it to this ESOP structure, that goes away. So now you have literally your $20 million in net income becomes $20 million of free cash flow.
Right. So
and then private and public, is there a difference between the two?
Sorry. Yes. Sorry about that. Yes. When you're selling the company, you're literally selling it to the employees. So if it's a public company, you would then have to take it private and then sell it to the employees. So it doesn't work. There are a lot of public companies that have partial ESOPs.
Yeah.
But if you have a partial ESOP, it doesn't work to totally remove the 280E issue.
Gotcha.
So in theory,
100% sale.
In theory, if you're a publicly traded cannabis company, you wanted to do this, you could potentially do like a take private transaction if you wanted to. I mean, I'm assuming that's highly complicated.
And who would be who would be the ideal public company that would want to take it private now?
Right now, there's no money to take. When you take a private company private,
you need a large.
Part of it is you need all the cash to be done that day. There's no way that anybody's going to be able to get all cash to take someone private. So that's not how they would do it. This is how they would do it. Let's say you're a large MSO and you have 75 dispensaries. 100 dispensaries. The biggest part of your tax issue, public companies, is those dispensaries. You can't hide anything in your cost of goods sold. So that's really your big chunk of issue with taxes. What you do is you take those dispensaries and you sell just that asset. So you're staying public, you're selling that asset to the employees via this ESOP structure.
Gotcha.
So now the dispensaries become their own company. Okay. Now the dispensaries are going to be owned by the employees, and the public company will get warrants to buy back a piece of the company in the future. A warrant is like a stock option. And so the day that they do this transaction, those warrants are basically worth very, very little, and it's stuck inside the asset side of the public company. It's a warrant to buy back, let's say it's 40% of the company. And let's say the value of, again, make it easy, the value of these dispensaries is $100 million.
Mm-hmm.
Okay. So on day one, the warrants or the value of that is very, very little. There's a lot of debt into this company. As you start paying down that debt, the value of these warrants start to expand inside the asset of the balance sheet of the public company. But now let's just say federal legalization occurs. Everything is great. 15 years down the line, 7-Eleven, Budweiser comes in and wants to buy this public company for, I don't know, $10 billion.
Yeah.
And let's say those dispensaries, that dispensary ESOP, let's say that's worth $1 billion now. All right, what we do is we terminate that ESOP. The stock now will go, 45% of that stock will go to the company. When Budweiser comes in, everyone does well. If that dispensary is worth $1 billion,
Yeah.
the employees of that company will now get $500 and $600 million, and the company itself will get another $400 million.
Wow.
So it's a second bite at the apple for the employer, for the public company, and for the actual employees, it's game changing.
Okay, so setting aside public companies, this announcement that was before Christmas, the largest ESOP, again for somebody that's new, it's watching this, ESOP stands for Employee Stock Ownership Plan. So Theory Wellness was involved in this announcement. They're a private company. How big's this company right now?
I'm under NDA with my companies, so I really can't talk specifically about any specific company.
Okay.
But any company that you see out there right now doing an ESOP, I'm in. There is no firm that's doing an ESOP without me.
Do you see the market? Do you see the market changing if there is rescheduling and 280E goes away, or that doesn't really impact it? I mean, it's going to be advantageous for companies to be leveraging this tax structure on a go-forward basis regardless.
Yeah.
Oh, yeah. So we've structured over 400 ESOPs in the past 24 years, over 22 billion in enterprise value in every industry. No other industry is hit by that 280E tax.
Right.
And so really, when you start talking to people about all these tax benefits, people do it. So in the cannabis industry, if it's rescheduled to Schedule 3, it's not as great because remember, now their tax rate will drop from, let's say, 60% down to the normal 45%.
Yeah.
But it's still a huge benefit because it's the same exact thing, which is you pay no taxes.
Right.
Do you see companies kind of leveraging these in ways to like build culture? Because like me, for instance, like seeing an employee-owned business, like that just has a better ring to it than like a privately held company by very few people. Are they also using this to kind of instill culture within the businesses?
I would think.
Oh, it's insane how much it works because once employees start realizing what this is, that all right, wait a second, I'm not an employee anymore. I am really running with the owners. I'm an owner.
Correct.
And it changes. So in terms of like people resigning, it's incredible. They just don't. The retention rate is something like, I think it's like 300% greater for an ESOP owned company than a regular company.
Okay.
What would you say then is like, with an announcement like this before Christmas, like, do you see a pathway of more companies being aware of this opportunity and this opening up the floodgates for more announcements like this? Like why is more of these deals not, I guess, been announced or people haven't taken this way? Is it just more or less people just becoming more and more educated in how the business side of the industry works?
Exactly. I mean, I call it the Gleeman method. I did this about, I don't know, like a year ago is where I finally came out. I've been talking to law firms and accounting firms about this structure now for the past year and a half. And, sometimes it took me, 3 meetings. Sometimes it takes me 10 meetings with all the staff, the tax attorneys, the ERISA attorneys. And so finally, I always get to, yeah, you really did it. This actually works. It's all about awareness and education. Nobody knows about this. In the normal industries, it's the same exact thing. What I always get is this. Wait a second, this sounds too good to be true.
Yeah.
And if it is so good, why aren't there more companies doing it? And it's all about education and awareness. That's pretty much it. That's the key. It really is. Because nobody knows about it. When I speak to people about this in the cannabis industry, and right now I'm getting referrals from law firms and accounting firms, I'm always getting that like, why isn't anybody doing it? Of course they want to do it. Now that I have 3 that just did it prior to December 31st. So now 3 companies that have gone over the line and are 100% owned by the employees. And we have a 4th one that's going to be done probably in about 10 daes.
Wow.
As far as this structure goes, I mean, is there a sweet spot as far as implementation goes into the business? Like, should entrepreneurs be evaluating and doing this on the front end, or wait until they get to like X amount of revenue and they actually need to leverage it and then roll it out? And can it scale with the business if you implement it, let's say from like day one of like a startup business?
I would say it's much, much better to start this company, to do an ESOP for a company that's already been around.
Okay.
So if you are a startup, it's going to be costly for it, and the owners, the shareholders, will not benefit as much. Okay. So I'll give you an example. Let's say you have a company. I think the floor is about $2.5 million in net income. Forgetting about revenue.
Yeah.
Right. So if you have a $10 million business in revenue and you're steady, you're going to be making about $2.5 million in net income. That's really the floor. So let's say it's a $2.5 million company in net income, and that company is valued at a multiple of, let's say, 5.
Yep.
Right. So that's $12.5 million.
Yeah.
So that means what you're doing with an ESOP is you're literally selling the company for $12.5 million to this ESOP structure. So to the employees. Now, it costs the employees nothing, but you are doing a sale up for $12.5 million.
Yep.
Now, currently in cannabis, there's no debt. There's a couple of companies out there, but basically we are an industry right now that is not very liquid because there's nobody that wants to get involved.
Yeah.
Right. So when you sell this company for $12.5 million, most likely what you're going to want to do is do it all seller notes, to sell for $12.5 million in all seller notes, where you then, as you get paid down, you don't pay any capital gains tax, but it's all seller notes. Now my group will come in and I will lend, in addition to the investment banking, we will lend from 1 to 1.5 times EBITDA.
Gotcha.
In the structure. Not that we want to, I'd rather not, but there's no other companies that are doing it. And since we understand that when you convert to an ESOP, you completely de-risk, because now your cash flow is going to be doubling to tripling.
Right.
So we get that.
So rescheduling actually may help your business quite a bit as more companies become more liquid. Like, do you see more opportunities like this, especially on the private side, coming to fruition?
Yeah, I'm not even looking at the public side. I mean, I pitched the idea that I just told you, selling dispensaries to some of the larger MSOs. And, I got that's interesting, but, it's complicated.
I see.
It was really more just conversations.
You're looking at,
it really is.
You're looking at 3 to 10 conversations on average, speaking with individual companies for them to really understand the whole process to the point where we're looking at possibly this actually happening in a deal following through.
I'm talking to, when I speak to law firms and accounting firms, it takes me usually from 3 conversations to 10 conversations for them to totally get it and be like, yes, it works. Now that it's all done, it's a completely different world. Now that we did it, because I've been getting a lot of accounting firms saying, I'll believe it when I see it. When it gets done, if it gets done, let's now talk.
Right.
So now that it's done, it's a different world. In talking with actual private companies, the way that usually works is we go in, we speak to them. Sometimes that'll take 1 meeting, 2 meetings, 3 meetings. And then what we do is we do what's called a phase 1 analysis. And we do an analysis of the company.
Okay.
So we look under the hood of the company and see, does it make sense for your company to do this? Does it make sense? And then we lay out exactly in that structure, all right, well, how much money will they be saving in taxes? How much money will they be saving in capital gains taxes? How much money would you be paying in taxes if you didn't do this? And we run through the whole thing and how long it's going to take and the regulation stuff.
Yeah.
And if they say yes, then we go out and we'll get engaged.
And
so far from doing those phase 1s, our response in the normal world, once you do a phase 1, is about 60% conversion. With ESOPs, it's about 90% conversion.
It's a fascinating story. What's your background? Like, how'd you get involved, I guess, within the cannabis space? Like, what were you doing prior to this, and what made you kind of say, you know what, there's an opportunity here that we can work around this?
Well, we've been in the business now for over 24 years.
Okay.
in the ESOP space, only ESOP investment banking. I kind of got into it personally about 4 years ago. With the cannabis space, I was talking to someone, and they were just talking about ESOPs, and they said, "Can you do a ESOP in the cannabis space?" And I'm like, "Why not? I mean, you could
Yeah.
do it." And I'm like, but then again, I wouldn't do it. And this is what I said. I wouldn't do it because the valuations are so high. If you're going to
Yeah.
get 3-4 times revenue from a strategic buyer, don't do an ESOP. Get that money. It makes more sense.
Yeah.
And they said to me, yeah, I get it. And there's also this thing, this weird thing called 280E.
Yeah.
Got it.
And then when they explained 280E to me, I got it. It was all of a sudden,
Light
it
went
just like
off.
clicked in my head. It was lightning. And I'm like, hoop, does not say anything to anybody. And at that point, we were looking at doing a private equity roll up. But we had some, as you guys know, it's a very difficult industry, having no knowledge of it to go and do a roll up. So
Oh,
we
yeah,
quickly learned, right, that, let's just be the investment banker. And that's where I just started going out and talking to people.
Wow. So what's the goal as far as like growth trajectory? Like you're planning on diving headfirst into the whole private side of this space. And as we start to see this industry mature even more and more, again, rescheduling takes place, 280E is not around anymore. It's still a very lucrative opportunity for you when you look across the country. Am I understanding that correctly?
Yeah, that's assuming it gets rescheduled. As we know, that I don't see that as 100% it's going to get rescheduled.
Yeah.
I
Oh,
see
it's
that right
very much
now.
so not. Very much so not 100%.
Yeah, not 100%. I mean, there's
Yeah.
so many issues with it. So if it gets rescheduled or not rescheduled, I think if it doesn't get rescheduled, it's actually better for the ESOP
Oh,
structure because
100%.
right because then they're going to save that much more. If
Yeah.
it does get rescheduled, well, great, you're still saving a ton of taxes. Like I said before, right now we did 3 that's done. We have the 4th one that's happening in like 10 days. We have another 8 that are in the pipeline for 2024, and that's from people I got in 2023. I think we're going to add on probably another 10 to 15 clients this year.
You
What does
said
the timeline? What does the timeline look like to actually structure and then implement the actual ESOP?
I like to say 6 months.
Okay, I had it. I
Let's
had it
say
between
6
six
months.
and nine. I had it between 6 and 9 months in my
Yeah,
head.
because we could do it earlier,
Yeah,
but I'd say 6 months because also you don't know what kind of regulatory hurdles that you're going to be
yeah,
in. And it's such a weird, bizarre space where you're dealing with the state and you're dealing with the towns. And every single state is different, and that's why
yeah.
we work with great attorneys in different areas.
And in my own first person experience, I understand doing diligence on private cannabis companies can be quite convoluted.
I
Once
bet.
you start to look under the hood and look at the books, and yeah, I'm assuming the level of diligence that you guys are doing on the front end is quite extensive. So I mean, I guess that can also be a little bit of a hurdle on the front end.
Yeah, I mean, so what you're doing it first is in that phase one analysis. I'm not. You're just giving me the information, whatever you give.
Yeah,
So I'm
Yeah.
looking at that and saying, look, based on the information that you just gave me, your company is worth a multiple of 5.
yeah,
Okay, so if you have adjusted net income, like there's something called EBITDA. That's the fancy investment banking term for what your net
yeah,
income is, right? Now, if you make a net income of let's say $2 million a year, but taking a $2 million salary, well, your net
correct.
income is not really 2 million. You got to add that
Yeah,
back.
the serious ad backs will have to happen. Yeah,
So you look at the
yeah,
add backs and you figure out what the company's really worth.
Yeah.
So we
yeah,
say, all right, look, your company's really worth $25 million. And when the actual ESOP occurs, what we do is we create what's called a SIM, a confidential information memorandum. That's when you hire us to actually do it. And
yeah,
then
yeah.
we actually then dig in, do the due diligence, make sure, all right, this is what we really believe the company is worth. We then go against what's called a trustee. The trustee is the guy that, or the woman or the company that's representing the employees in this transaction.
Yeah.
Okay.
Bet you those
That's
com-
me.
bet you a lot of these companies got some good, strong work ethics, especially if they've got a vested interest, to say the least, which is so
Yeah,
important. I would think even for younger generations right now, nobody wants to work for a corporation anymore. And if you can own a piece of something, that's only going to speak volumes as to how successful the business is going to be. I would like to ask one last question. You'd said that you are not really targeting the public forum, so to speak. I'd be curious if there's been any public companies that have reached out to you and just to inquire about how this works. Have you had any conversations like that?
I have. I've spoken to
You don't have to give
Probably.
names, but I just would be curious if like there are some public companies that have reached out to you to learn more or want to learn more.
No one has reached out to me because, again, getting out there that we exist and the ESOP structure exists, that's the most difficult part of it. So
Yeah.
really it's always been, I have an attorney that'll say, oh, why don't you go and speak to this person who works at this MSO?
Gotcha.
And then once you speak, that's how it really works. I haven't, this hasn't been, again, because it hasn't happened. And besides this right now, it really is not out there. So people don't know about it. So these larger MSOs, they don't know that this exists at all.
You think they'll know in a hurry though if rescheduling doesn't work out the way they're hoping?
I think now that it's done, I think they'll start getting to know it pretty quickly.
Yeah.
Pretty quickly. I think here's a great point. So there was a company that had no idea that existed. It was a company in California. They were a distribution firm, and they had East West Bank was lending to them. They went out of business, and it was a cash flow issue. It's just a cash flow issue. If they had done this ESOP structure, they would have been totally successful.
Yeah.
They would have totally been able to ride their cash flow issues because they would have had so much more cash from not paying any taxes.
Yeah.
Yeah, people don't understand how difficult the actual managing of a cash flow cycle within a business is. And to do that in a cannabis environment is even more difficult.
Yeah.
Oh, they have no idea. And you have all these companies that are going out, let's say in New York, you have all these companies that are about to start. They have and they got investors. They're not getting investors from large banks. They're getting friends and family that are coming in with the hope of, we're going to make tons of money. And they think they're going to make tons of money. And then they invest the money, start working at it, and they realize, oh, there's this 280E thing, which is taking all my cash flow.
Correct.
Oh, my payment structure is different. They don't realize all the stuff that's going to happen.
Yeah.
Correct.
Darren Gleeman, managing partner of MBO Ventures. If people want to learn more, where can they find you?
Well, they can go to my website or contact me call me, 646-734-2035. Just call me, or email me. And no one's going to call me.
What's your email? What's your email?
My email is dgleeman, so DGLEEMAN at mboventures.com, and they will find me.
And that's
Somehow.
That's M as in Michael, B as in Bob, O as in Oreo Ventures. You're based out of where? Is it New York?
I'm based out of New York.
Sorry about your Jets and Giants. Sorry about your Jets and Giants this year, buddy. Rough year for them.
Oh man, the Jets this year, I knew they were going to do well. I knew it. This is the year.
And then, but anyways,
Mr. Rogers falls apart.
Yeah, on the second or third snap. But hey, you got your head coach back. He's gotten another year, so we'll see how that all plays out. But nevertheless, it's always something interesting learning within this space. But I think you hit it. It's just about learning more about the space and ways around it. And just, the overall industry and the growth of it is becoming more sophisticated. And I think it'll be interesting to see everybody's front and center with this 280E tax code topic heading into here 2024. But appreciate you checking in and giving us an update and outline of this announcement prior to Christmas. And most importantly, let's keep in touch.
Absolutely. I appreciate it, guys. Thank you so much for getting me.
Thank you for your time.
Thanks, Darren. What is up, everyone? What'd you think of the video? Leave a comment below. And as usual, if you want to subscribe to our channel, then click on the link here. If you want to see more videos like this, then click on the link here. As usual, click on that bell right below us to get all the notifications, because at the end of the day, TDR sets the narrative, because we would not be here without you. Thanks for watching, everyone.